What's good, people, traders, and dedicated gold chasers? Welcome back to another modern day trader podcast. And today we have a very special guest on the show. And to me,
A
it's
big
very
one.
special just because without him, I feel like one half of the modern day trader wouldn't have been trading right now. Dead ass. Uh, that's right. Like the trend that you're looking at right now, I'd probably still be wondering what is Forex? Is it the toothbrush of some like a brand of toothbrush? Is it a brand of kicks? What is it? But without this trend, me, I
Yeah.
wouldn't know. So let me introduce the man, the myth, the legend, man.
I knew you were gonna
Katleho
say that.
Molechane. But
Let's
wait,
go.
wait. Oh, let me just take it all back before we actually like jump into the pod. Let me take it all back. Back in the day, 2016, almost 10 years ago. Almost 10 years ago. Oh, it's 2016. Me, I didn't know a single thing about trading. I didn't know what a candlestick was. I couldn't differentiate a candlestick and a candlelight dinner, to be honest. Like, I didn't have a clue what a chart was. If you ask me about market structure at the time, I'd probably tell you, hey, bro, it's probably some building in Cape Town or something, bro. I don't know. But what I do know is that there was one day where my boy KT came into my room and told me about this thing almost 10 years ago, 9 years ago. Now, at the time, that
Yeah.
first year, I didn't take it serious at all, right? This just speaks to how long and experienced this man is. Like he's been in the game and properly trading. I remember one day I walked into his room, he was looking at Luciano theory or something like that. Me, I ain't never seen that shit before in my life, bro. I was thinking, what's this shit doing, bro? You're not trying to go to class, bro. What you saying there? Like, you know what I mean? Anyway, like
Yeah.
it comes all the way back from then, and then we shift off. So he puts me on to trading, gives me some videos, tells me, listen, watch these, will teach you how to actually like learn about trading and like genuinely like get you into it. And then after that, I think a year or two later, he brings another spark into the group. And it's not just me, it was a group of traders. I can't say Sam and his brother that we had on the podcast, particularly because they started their own journey already on the other side. But there were a whole group of traders in our race at the time that KT just sparked. And then the new spark that he brought was cryptos, and we'll touch on that too. And I remember he brought in at the time XRP, and boys made money off from that too. So I wanted to say shout out to my boy because he put the spark that actually lit the fire and just keep on burning today. So I'm not just speaking about myself. I'm speaking about my boy Nepo, Corp, every single person that's actually trading because it comes down to the man that you see on your screen today. And so I just wanted to take the time to say, firstly, shout out, bro, because you started not just uh, an initiative to say, oh, you must trade, but you started a whole movement that till this day, Oaks are still trading. It's been 9, 10 years almost. And O's are genuinely not just like blowing accounts anymore. We're starting to move
Mm,
and we're starting to actually make money. So, guys,
mm.
without further ado, let's give a warm welcome to my guy, Katie, bro.
Yes,
Let's
sir.
go.
Yes, sir. Thank you very much
Welcome
for
to
that
the
intro,
pod,
dog.
bro. Damn.
Welcome to the
Very
Welcome
pod,
to the
humbled
bro.
for those
pod, bro.
words.
Gee, my boy took us all the way back, bro.
All
The
the way
I
back,
sensei,
bro.
enjoy.
the master. No, but that's so
Definitely
dope.
humbled by that.
Because I actually wasn't even aware that like you really like sparked for all the oaks to really like come in and learn about the markets. So I
Yeah,
think that's actually like a good place to start. Like you obviously open or like showed all the other gents, what this thing's about, and
yeah,
you really advocated for them to jump into it to a point where fast forward 10 years, everyone's still in it. Not maybe not everyone, but
mm,
those who had what it took to go through the pain, But obviously,
yeah,
yeah, you advocated to that point. So keen to understand how you got into it, how you heard about it, what your journeys kind of look like. And yeah, just who is KT, bro, for those who
Well, firstly,
um
just going into, I think I'll answer the journey part, right? So how everything started, like back when I was in high school, right? So I started just getting a bit interested in like, okay, how can I make money? Like, kind of like those questions, and I came across social what do they call it? Social network marketing. It was actually Vima. This is
Sure.
the company. Came across Vima. I'm like, okay, these young guys are making money. What's going on? And I just got a bit
Yeah.
more interested in that. And to be honest, that was probably one of the best things that happened to me, right? And the reason that I'm going to say that is largely due to the fact that it sparked the self-development, gave me that self-development spark,
Mm.
like they really drove that, okay, self-development and so forth. It turns out it was a pyramid scheme, though. I just need to add that, but nonetheless,
The first two or three normally are in the journey, so
Oh,
it's
damn.
understandable.
nonetheless, you know. But like I got it was Vima, and then I checked. I went through the whole Vima thing, and as I mentioned, it was a pyramid scheme, so that did not work out. But by doing that, I got exposed to a lot of guys. Like I started following people on Facebook, and checking out. Okay, who are these guys? And there used to be the like a few posts where I'll see like the MT4, and I'll just see like $1,000, $1,000,
Blue
six
screens,
thousand dollar
bro.
tips. Yeah, so I'm wondering, bro, what is going on here? I
People
need
are
to find
printing
out
money.
how.
People are
Yeah,
printing
like
money,
I'm
and
like,
I need to know what's
what
going
is
on.
this?
Bro.
What is
Yeah,
this? So I try to figure it out. I download the MetaTrader app. And then I obviously start trading demo. I had no clue what I was doing. I had absolutely no clue what I was doing. And then I remember this one time specifically though. I think it was like a $10,000 demo account, and I took like heavy lots. I don't even remember what pair it was, but I think I took like a sell or something. And I woke up and I see like, oh, I saw 5,000 plus dollars. I'm like, nope, we online, boys. We going, I'm ready for this. And that's literally how the journey started.
yeah.
And I remember I was getting my allowance. I'm like, you know what? I started figuring it out a bit. Oh, okay. So you need a broker, you need to deposit. Oh, and then you trade. So eventually, fast forward, my allowance, I was like, okay, now I'll take $100. And I was getting the youngest allowance. I was like, now I'll take $100. Let's see if I can flip it. And I remember making $100 on like 100% ROI basically from that $100.
Jeez.
I was like, bro, this is absolutely crazy, because keep in mind I was just basically looking at like YouTube videos. I'd go on YouTube, try to figure out, okay, and then try to take trades. I was obviously over leveraging. But I
Mm.
remember like closing $100 and thinking to myself, bro, I just made $100, you know?
Mm.
And I was like, okay, now this is it. And that's basically how the journey started. Little did I know, the journey that I was about to go on.
It hadn't even started. It hadn't even
Yo,
started, bro.
I won't even lie. This is probably, I'll say this was probably or is probably one of the hardest things I've ever did, I've ever
Yeah.
done. And not because trading is difficult, but because changing myself is difficult or was
Mm.
difficult. I found that I have a bit of a stubborn bone in me, and that,
Mm.
largely causes, I guess, the resistance. Trading is one of the very few things I think where that doesn't work for you because the tricky
Sure.
part is trying to figure out that, okay, when it comes to trading, I need to have some form of it's not the same method that you would use to get successful in other areas.
Mm.
Trading is a lot different. So that's basically how the journey started. And I just, I was basically trying to get more and more information.
Sure. And at what point did the journey, I guess, once you got over that initial high of maybe making some money for the first time, at what point did the journey kind of get more structured, and really kind of start to take shape in terms of developing a strategy and really kind of committing to the journey? And how far in was
Honestly,
that since when you
yeah, I
started?
think it took me way longer than it should have. I really think that okay, it started very soon, right? The reason I'd say that is after the $100 withdrawal, withdrew some of it, and then I ended up ultimately blowing that $100 that I had made. You know what I mean? Like by
Mm.
putting slowly back in the market, like okay, no, I lost this trade. Then I realized I'm like, okay, dude, I need to figure out how this thing works because it's very
Mm.
clear that I've made some cash. So let me try to figure out how it works. And at the time, man, I think the information also on the internet wasn't the greatest, you know what I mean?
Mm.
So it was not necessarily the greatest, but I tried seeking information. Oh, and one of my another person that was actually very instrumental to my journey was this other guy, my friend Lewu. It was a yeah, we you can say acquaintances, and the trading is what brought us closer, you know.
Mm.
We're just acquaintances, and I was posting on my WhatsApp story and whatever. And he's like, "Oh, you're into trading? I know this guy at my race. He's doing quite well in trading. His name was Motondi, right?" And that's
Mm.
basically the guy that was at that level where, you know, I would say he is, or he was where we kind of are relative to someone that's starting out, you know. And he
Jeez.
kind of like really helped in
What
terms
was he
of,
still in varsity at this time?
he was in varsity, bro. Like I
Crazy,
actually wonder where he is. I
crazy.
haven't spoken to him in quite a long time, but I'll check if I still have his contact. But he basically got us, like, you know, the my friend started a group, you know, on WhatsApp, and the guy was basically just giving us like, okay, that's where I found out about things like the Quasimodo, ICT. So that broadened my perspective in terms of where to look for the information, because that's also a very big problem. If you don't know where to look, then it's
Mm.
really pointless, you know. And then I just started delving into that. I started buying, you know, like ICT courses. I got ripped off quite a few times, but you know, I got some of the information. I downloaded
Charge it to the
some
game.
videos. Exactly, you know. So yeah, that's basically how the journey started. So I'd say probably like a year, nah, maybe like 2, 3 years after that, you know, after maybe 2 years after the high, and then like where I'd say Donny started coming into the picture where everything was a bit more structured, and I felt like
Mm.
I was making some progress, you know.
No,
Oh, okay.
clean,
I hear you,
clean.
bro. I hear you. So obviously, in the time from your first withdrawal, the first 100 till 2025, now there's been multiple renditions of that strategy. Know you mentioned you started learning on YouTube, then you started buying ICT, and this was like 10 years ago, bro. Like 8 years ago when
Mm.
you jumped on
And
ICT back then. Back then, I remember you gave me them videos like with the kill zones and like the cold and fib
First mover
ratio and all
advantage,
them
bro.
things, bro. Back in the day, you know what I mean? So you've been through multiple renditions of your trading strategy at this point. But I wanted to ask you on the 15th of March 2025, what does your trading strategy look like right now? What is your approach in the market without necessarily jumping into the charts? What is it that you like? How do you prepare to go into the market when you're doing your analysis? Is there a specific time that you trade? Is there a specific time, like is there a specific session that you trade? Is there a specific setup that you look at? What is it that you actually do on a day-to-day basis to get you into that mode to essentially execute a trade?
yeah. Okay, so with that said, one thing I'll first say is that with trading generally, like I realize that it's almost like you have to learn so much crap to realize that you don't need it, you know? So my
That's
system
a
or
good point.
strategy now is a lot, you know, it's very simple. So just going into it, what I simply do is I do a top-down analysis. So I'll look at the weekly, and I'll basically do a weekly analysis once every week. So beginning of the week, I'll do my weekly analysis, and then the monthly once every month. But I don't necessarily focus on that because my trading is day trading. My trading style is a day trading style, right? But most importantly, I look at the 4 hour. So I go 4 hour, I look at the market structure, and then I break it down. I look at the 4 hour market structure, and then I look at the extreme demand and or supply zones on the 4 hour. And then I go to the 1 hour, and then I refine that. So sometimes you'll have internal market structure breaking. So the external on the 4 hour, you know, and then you'll start playing with the internal market structure. So then I go on the 1 hour, and then I simply look at internal market structure and my most extreme demand and or supply zone on that time frame, right? And then what I'll simply do is I'll then go down to the 15 minute. I trade specifically London session and New York session. So I do trade both. And I obviously utilize the kill zone. So in New York time, it's three to like around, no, it's 4 a.m. to 5. That's my kill zone. But I'll push it like 30 minutes after. So New York time specifically. So if I'm trading the London session with the New York time setting on trading view, it will be 4, 5, and then maybe like a 30-minute break, additional period after that. And then if I don't get a trade in that time zone, I'll wait a little bit and wait for the actual New York session to begin to see if I've gotten an entry. But I again will wait for lower market time, lower time frame market structure to shift as well. So 4 hour, I look at market structure. 1 hour market structure, the most extreme demand and or supply zones. And on the 15 minute, I basically look for a shift in market structure, and then I try the demand or supply zone depending on which direction I want to take the trade. So when I get a rejection off of the 5 minute or the 15 minute demand and or supply zone in my trading time, that's basically when I'll take the trade.
And is this on a range of pairs or asset classes, or do you focus on a few?
I focus on specifically, I'd say three, but it's GBP USD, Euro USD, and gold. So those are kind of very similar, especially GBP and USD and Euro USD. Um, so I simply look for one. I simply look for a trade in one of the other. Like I've realized that those types of pairs based on the strategy. Sometimes I might not be seeing exactly what I want to see on GU, but it will be, playing out perfectly on EU, and I've kind of given myself that opportunity to trade the two. And then gold is a bit of a wild card. Sometimes gold does
Sure.
present good setups, and then I'll throw it in there.
Before we move too far from the strategy, I'm just trying to understand. So you walked us through, and I think a lot of us follow like a top-down approach. But I know for sure there's someone watching this who is a lot maybe less advanced. So let's say, for example, hypothetically, you're about to execute a buy. You've gotten all all the criteria has been met from top down. Can you almost walk us through from like the weekly in terms of like this is what you see on a weekly, which makes you then drop down to the daily or the 4 hour. I know you didn't mention the daily, but then you drop down to the 4 hour. I know you mentioned your external. I think I call what you say external market structure, external range liquidity, and I think it's maybe the same thing. Might be different. What you see there, and then that leads you to then the 1 hour and like what you almost look for explicitly there, which then informs the execution. Because I think that will give viewers a better understanding of like putting it all together. Because I find that sometimes the hardest thing, like we know what to do top down, it seems easy, but like how do you actually put it together in a way that produces the most favorable, probable outcome?
100%. So firstly, I don't put too much emphasis or on the weekly, the monthly, or the daily, right? It's because I understand that I'm trading I day trade, right? So how I try to think of this. So let's say I'm about to take a buy, right? So the scenario is price is at a demand zone, right? If the price rejects the demand zone, then prepare to buy at a lower time frame demand zone. So the demand zone that we're talking about, this is the macro demand zone, being the 4 hour
4H.
demand zone,
Okay.
right? Yeah. So the 4H demand zone,
Okay.
if price hits the 4H demand zone, then now we wait. We want to see what price is going to do. Is price going to reject the demand zone, or is it going to break through the demand zone, right? And you can't, so basically, if you're going to take a trade because it hits the demand zone, then you have a 50-50 chance because you haven't seen whether it's going to break or change, basically break or reverse. So what
Yeah.
I do is I wait to see what price does on the 4 hour time frame, right? So if it's rejecting the time frame, then I say, okay, I go to the 1 hour, then I look for price to give me, so I'm going to buy at a lower time frame demand zone, so a 1 hour demand zone.
Sure.
So price is rejecting the 4 hour, it goes up. So I'm going to simply wait for price to come back and hit a 1 hour demand zone in order for me to
Sure.
get into the trade, right? So
Yeah.
with that said, fine, price comes, now we come into the session, right? So now I go to the 15 minutes and I say, okay, price is approaching my 1 hour demand zone. Let's see what price does on the 15 minute or the 5 minute. This is when I'm specifically now in that period. Let's say it's London session. I'm in that zone. I say, okay, I just need to see a change of market structure to the upside because price would obviously be coming down into the 1 hour demand. So now I'll say, okay, on the 5 minutes and the 15 minute, I want to see some change of market structure. Depending on where I get to put my stop or how wide my stop needs to be, sometimes I can take that first entry on that hit of that 1 hour demand zone because it is like confirmation. We've already rejected the 4 hour.
You
So when
broke
the
stop.
1 hour comes, I don't necessarily need to wait for a rejection, but that can give me more confidence to take the buy there, right?
Mm.
But if it does happen that maybe it doesn't come in your zone or you maybe missed the opportunity, what you would then do is simply just wait for a break of market structure and then
Sure.
just take the trade to the upside.
So when you see that break of market structure, I know you mentioned you're just gonna execute. Then what is that? A market execution? Is it a buy stop? In this instance, when we bouncing out of the demand zone, next thing you know, we flipping from the bearish 15 minute to now bullish. Are you taking a buy stop? Or are you taking a buy limit? What are you looking at there?
I normally take I don't set limits more often than not. I found that sometimes I'd rather just see what the market wants to do at that point because what I've realized happens is that sometimes I will set a limit and then price will just go straight through that zone. And I feel like if I just waited, I wouldn't have taken the trade. So I just lost
Sure.
0.5% just for nothing. That used to happen to me a lot. I think it is also partly PTSD. But what I do now, instead of setting a limit, I'll set an alert, right?
Okay.
So
Sure.
yeah, so price will tell me that hey, we at that zone, and then what I'll simply do is then just wait for, check the charts and then take
Observe.
a live execution.
So is that a
Big,
live
big.
execution after market structure breaks back to the upside on the 15 minute? Or is it just like we react into that new 1 hour demand and now we like form a, let's say, bullish engulfing just for candlestick people and then boom, you
It,
inside?
It depends on the time. So if it is within the second half of my trading time, so meaning 4:30 upwards, between 4:30 and ultimately 5:30, I will take it at the rejection of that 1 hour demand zone. But if it doesn't happen at that time, so let's say price hits my 1 hour, but it's not my trading time yet, and it automatically starts reversing. What I'll do is then I'll wait for price to pull back on the lower time frame. So I always look to try and get in on a demand zone if I'm buying, right? So the break of market structure is that extra confirmation that okay, price has broken market structure, but now let's look at the time. So if price rejects the 1 hour demand zone before entry, before I can enter, before the kill zone, I'll let it go. And then if it can come back, normally it doesn't come back deep. But what I'll simply do is I'll look for a demand zone. I want that pullback into like kind of a demand zone or a fair value gap.
Hmm.
But I prefer to use demand zones because yeah, fair value gap sometimes for me personally, I'm not too much of a
Mm.
fan of, but I just prefer the demand or supply zones.
Mm. I found with fair value gaps, um, I don't know, and maybe it's just something I'm observing recently. The longer it takes before price mitigates it, it's almost like the less reliance I almost have on it. And if it's like a fresh fair value gap, that's recently formed, whether that's on the daily or 1 hour, that initial retest normally has the highest probability of the reaction away.
Yeah,
So whether that's even a daily that's just formed and now the daily fair value gap is being mitigated for the first time, which on the 4 hour may look like a return to demand. I think that kind of combination works well. But it's like if a 4 hour one has formed and then maybe 2 weeks time the fair value gap's being tested, more often than
you're in
not,
trouble, my boy.
done. You're toast.
And funny that you said that. I actually realized that a lot later because I was like, dude, these like fair value gaps, like yes, I see it clearly. It's good price range and everything, but it will almost just give you a bounce and then like go down to the actual demand zone. It's
Yeah,
almost like a pause. It's like where price is going to pause. I'm like, now I'm just gonna go for the deeper zones.
I
Meaning the
get you.
demand and or supply zone.
And on that, because that was actually the next question. Let's say you're looking, I know you said now, okay, it's reacted from the 4 hour demand, and now you're looking for now a retest of, a 1 hour demand, for example, now. If you do have now multiple 1 hour demands, whether some are fair value gaps or, there's times where market structure isn't clean in like a range and you have like three lows within a clearly defined range, how do you almost what's your process of like determining the most
Hmm.
the likeliest area where price is going to gravitate to? Knowing that
Oh,
it it won't always go to the deepest point. Sometimes it just taps the first one, then runs. But kind of what's your thought process there? Because that's, I think, I found the most difficult thing. It's like you can have the plan, but then you get a variation of like how it should, how market structure should play out. And then you're like, hey, what do I do? Then you hesitate. And so just keen to hear your thoughts there.
Well, I feel like I've put so many L's that I just wait for the deepest one. Like I'm content to say that, hey, bro, if it doesn't go to the deepest one, then it's all right. But keep in mind that
Sure.
let's say that's something that's happening on, like you're saying, like the 1 hour or maybe 4 hour. I'll also my zone my kill zones also matter. You know what I mean? So I'll kind of almost look at the kill zones and see what price is doing. So as you're saying, if there's three 1 hour demand zones, let's say, right? I'll obviously outline the most extreme one. Hence, I said in the beginning, the most extreme demand and or supply zones, because I always just look for the
Bro.
deepest ones, right? But what happens, like you're saying, sometimes price will go to the one in the middle and just simply reverse. But I know that it's most likely going to do that in my trading session or a kill zone. So what
Mm.
will most likely happen is that I'll either get a 5 minute or a 15-minute setup where price is basically breaking market structure to the upside, comes back to retest the demand zone, and then I try catch that because even if it breaks through, then at least I know that market structure was bullish on the 15. If it's most likely going to bounce, it's going to bounce, yeah. And my stop loss is kind of safe because we've gotten that
Sure.
rejection off of that one. Then I just want a break of market structure on the lower time frames.
Clean, clean. So as we kind of wrap up the strategy section, just keen to understand what your position is around. Are you trying to build prop firm capital at the moment, or going the prop firm route, or are you trading personal capital? And depending on which one it is, what are kind of just like shorter term funding goals that you're aiming for?
Yeah, my goals are I'm going the prop firm funding routes. You know, that is what I think is just most efficient at the moment. You know, that's really how you get to because one thing about trading, or one thing that I've realized is that you can't bet the house all the time because you're not gonna win all the trades, you know. So when you're trying to go the even if I was to say, you know what, I'm gonna put 10,000 Rand into accounts and start trading that, but you could still take probably half of that capital, get a $50,000 account,
Mm.
and you could be making, you know, if you're making like 5 to 10% a month, that's that's really good
Yeah,
money. So I'm going the prop firm route. I did have a bit of a setback. I was actually supposed to be, already at least on the prop firm journey right now, but just had a
sure.
bit of a setback. So I am going to be starting that journey beginning of April. And I'm
Let's
gonna just be
go.
sharing it as well. You know, I'm just gonna be sharing basically from me starting the journey all the way to, ultimately trying to get funded. But my goal for this year is to be funded by $200,000. So I have a two hundred
Let's
thousand
go.
dollar account by the end of this year. And yeah, that's basically just the goal. You know, I'm really trying to take it simple, just relax and just focus on that, you know.
Six-figure boys in 2025. Let's
I
go.
definitely we're
Let's
in there,
go.
boys.
Let's go. Let's
Let's
go.
go.
So, Katie, done with the trading, everything. We've spoken about strategy. We've spoken about your churn. We've spoken about funding and everything. Now, as I mentioned at the start and in the intro, obviously you introduced me personally. I don't know about the other boys, but you introduced me personally into cryptos. And we know that a large chunk of your portfolio is invested into cryptos. So my first question is, what does Katie's crypto portfolio firstly look like? And then what is your management overall, like your overall portfolio? What is your management? What is your split between cryptos, normal portfolio, and then what's the risk that you have, your risk exposure to cryptos at the current moment?
Definitely. So crypto, I'm all in, ladies and gentlemen. I am all in, like ball to the wall, you know. So exposure, I feel like I'm considering that I'm still so young, I'm willing to be like 100% fully exposed to crypto. With that said, though, I am working on um kind of like diversifying a little bit into maybe the S&P or just NASDAQ, NASDAQ 100, just diversifying between that. But I'm still going to be no less than 80% exposed to crypto, largely because of where we are in the cycle. I'm really big on the crypto cycles, and I think that the cycle is not over. So my exposure is very much crypto. And as I mentioned, I am looking to kind of just diversify a little bit into S&P or Nasdaq. And when it comes to the crypto portfolio, man, I really think that I have my the I guess you can call the major bag or the spot where basically I just look to accumulate, the likes of the Ethereum, Solana, XRP, and the Binance coin, BNB. So I'm not really too big into the memes. Well, okay, I am into memes, right? But I realize that it's just best when it comes to the spot bag to accumulate the long-term coins, the coins that you know that, bro, if you had to go in a coma for 2 years, you wouldn't be, or you wouldn't wake up with the thing
Mm.
being rug pulled. So ultimately, that's where my main major exposure is. I also do know, well, I've kind of put down the clit for margin trading, especially the last few months. I think that's where I had one of my toughest lessons, being into the crypto market. It was a very tough lesson, a very expensive one as well. But I'm mainly just now looking into accumulating spot.
Cool.
Okay.
And on quick one, can I just jump in there on the crypto side? So like there's so much, I think crypto in this stage almost feels like what Forex was when we kind of got in. And like every second thing is a bit of a scam. So
Mm.
like it feels like there's a lot of people who want to get into it. But one, they don't know what like a good source of information is to begin. So how would you recommend someone kind of goes about thinking about how they will invest in crypto, whether that's like what's your thought process around evaluating, a coin, or basically doing your due diligence on whether you're going to invest in a coin, and what options are there when it comes to access as well. So you obviously purchase, the coin itself, so you have very direct exposure. So I think that comes with a lot more volatility with regards to price fluctuations. What would you recommend other options are in terms of like a crypto ETF or passives, like a passive um, placement or something like that? And what options do people have if they don't want that direct exposure or if they don't want to manage it themselves? So I think it's getting broader and it's getting more
Mm.
um, I guess, traditional, dare I say, in that sense, where people are trying to democratize it, but it needs a bit more regulation and stuff like that.
So I think for anyone that's trying to get into crypto, the most important thing is to understand that this is a very volatile market, right? It is technically still a new asset class, that is obviously just, getting more recognition and so forth. The adoption is growing. But the most important thing is to understand that it's volatile, right? So by understanding that, it's very important that you do the research before you put your money there. Because you can put your money in a coin, next thing you know, it's down 50%. I mean, look at what has happened over the last 2, 3 months, right? So the most important thing would be first to do the research. So a website that I would recommend for anyone that wants to kind of like get into it, do some research is CoinMarketCap. You just go into CoinMarketCap, that will literally give you all the resources that you need in terms of understanding what the coin is, what the blockchain is, and proof of stake, proof of work, and all of those things. So if you go on CoinMarketCap, that is basically all you need for your crypto research, right? And when you want to purchase the crypto assets, so anyone that is trying to get into crypto, don't listen to anybody that says, no, I'll buy the crypto for you.
Mm.
No, send me this, send me money. That is a scam, right? Because this thing is very easy to do. You simply download a Luno account or a Kraken account uh, app. You download the Luna app or the Kraken app. There's also quite a few other crypto or Coinbase, a few crypto exchanges that you can use. You do the whole KYC. They will want a picture of you, of your ID and so forth, the KYC process. But it's just, and then from there you simply start buying, I'd say the coins that you've researched, and you kind of have strong conviction on, you start slowly accumulating into that. And when it comes to maybe someone that doesn't want the direct exposure, another thing that I can recommend and that I normally recommend for people that aren't necessarily into the markets like that but want the exposure and they ask me is also easy equities, right? You can use easy equities to buy
ETF.
bundles, basically. There'll be a top 10 cryptocurrencies or top 10 meme coins, and that is the best way to be exposed. Because if you're like, dude, look, I don't really the crypto research, but I think I know this thing is gonna go up, or at least I am willing to bet that it will, right? Then
Yeah.
what you simply do, the most efficient way to then go about it is to buy those bundles because that kind of diversifies your holdings and you won't be
Mm.
exposed to any one coin.
Perfect.
So it's a
Katie's,
passive indexation kind of
yeah.
Yeah,
option.
basically it's just buying an index. So that is ultimately
Mm.
the strategy. Like you said, Sam, this is literally, I like to think about it as crypto right now is the internet in 2006, or 2007. I was looking at another thing the other day and it says like less than 4% of the world have adopted crypto, less than 4% of the world owns crypto, because we are still very, very, very early. And now
Mm.
we are seeing the institutional interest come in.
Mm.
Previous cycle, it was more like a everybody was taking a bet on it, but it was more like a giga brain bet. The reason I say that is because there was no institutions behind it. So you really needed to have conviction and understand what's going on, right?
Mm.
But now it doesn't take that much of conviction, or I wouldn't say conviction, I'd rather say it doesn't take that much research, or it's not as much of a risk as it was the previous cycle because now you know that MicroStrategy owns billions worth. Why would Michael Saylor buy so much? Clearly, there's something that he knows or understands that perhaps you don't. Hence, it's important to do the research. And I'm not saying just go off of what these other institutions or these people are doing, but look at what they're doing and then think to yourself, why would these people put so much money behind this? And then from there, say, okay, let me go research to find out why. And it's very clear, or let me rather say that it will be very clear to you if you actually, really go out there and do the research with intention that, oh, okay, this is where the world is going.
Yeah. So, Katie, I actually wanted to take the exact opposite route of Sam. So, Sam spoke about being like diversifying your risk and really just wanting to protect your capital. My perspective is from a person that's coming into uni, young person doesn't have too much responsibilities, getting a bit of money from, let's say, his tutor or getting money from his parents, got some money like on the side. And obviously, we just came out of, I think, in my opinion, what's the third cycle of the bull run on BTC specifically. So we had from, let's say, from 0 to 16, then we had the pullback, then we went from 6 to 20, then we had the pullback, and then we boom went all the way till 60, and then I think we went all the way to 100 now recently to the back end of 2024. So now obviously for majority of the crypto classes we're sitting at all-time highs, if not slightly below at all-time highs. What is your opinion and what is your advice to somebody that has the capital and wants to like say, okay, no, obviously that we're not giving financial advice at all on the platform, but what is your opinion? What would you do if you had extra thousand rand coming in every month and you just wanted to say you can take all the risks that you can because you're in uni or you don't have any responsibilities and you want to expose yourself to cryptos because you know there's a high chance that it might grow. Are you of the opinion that, listen, we are at all-time highs, let's wait for retracement? Or are you of the opinion that, listen, we're just going to dollar cost average all the way through these all-time highs, and if we come down, we're just going to buy low and then we'll continue to ride this wave to the upside? What are your options with this?
100%. So as if you can like recall it at first I didn't mention Bitcoin. I said Ethereum, Solana, I took it from there. Largely because you're right. I think Bitcoin has moved so much that, look, unless you have I'd say R1 million plus that you just want to keep, because Bitcoin is a very good store of value for the long term. You understand? I really do believe that it has some great value. But now when it comes to, I'm trying to make a bag, I'm leaving here with something, you kind of then have to look at the other alternatives that you have, which is the altcoins.
Altcoins.
Now, with what you said, some of the altcoins, in fact, majority of the altcoins have pulled back to pre-Bitcoin halving levels. So there's definitely still so much upside potential. Again, one thing that I think is very difficult is to try and guess when everything is going to happen. And we have to be very honest with ourselves that it is a guess, no matter how much analysis and so forth, because no one really knows when anything is going to happen in the market if we're just being honest. We basically just try to put together as much information that would then allow us to take this bet confidently. But I would say anybody that's saying, I have an extra $1,000 every single month that I'm literally willing to dump into crypto. I would say look at the altcoins, look at the likes of Solana. Look at where Solana is. Solana under $200 for me is a bargain. Is a bargain. I'm quoted to selling something, just so I can get some more.
Yeah.
I joke, but you get my point. Like Solana is
Yeah.
look at Solana, look at like Filecoin, look at Link. There's still a lot of opportunity in the market. So one thing that I would first advise a person is that understand Bitcoin, do the research, understand Bitcoin, because that gives you a very strong confidence on the crypto market as a whole, right? And then now you start looking into the specific opportunities that are in this crypto market, like the likes of the Links, the XRP, XLM, Cardano. And another thing that is that we can look at and say, okay, if you want to kind of go about this the most efficient way as well, you can or kind of ride the coattails of the big institutions. Look at what the United States is doing. They're literally creating a reserve where they'll be buying the likes of Bitcoin, Ethereum, Solana, Cardano, XRP. So honestly speaking, look, even if you're like, okay, I don't want to complicate this, you can just literally build the same portfolio that America is building. Because it's very important to understand that some of these institutions they too big to fail. You know what I mean? And it gets to a point where too much money can be put in. How can I put this? They wouldn't do this if it was almost a sure thing. Almost a sure thing. Think about Michael Saylor. Think about the strategy that they're using, meaning that there's a fundamental understanding that this person has. It's like, and the thing that makes it tricky, right, is trying to explain Instagram to somebody in 2006 or trying to say, Amazon is the one in 2006, for example, or 2008. There's still so much potential to where this thing can go, like crypto as a whole, right? So
Yeah.
the blockchain technology has given us so many options in terms of technological advancement that, guys, all it really takes is for you to look at one coin and be convinced. You could think everything else is going to zero, which is most likely not. But if you can really just understand blockchain technology and what it's going to do for the future, then I think that you would be sold on cryptos.
Mm. And I'm going to play maybe a little devil's advocate on that point because I think a big argument behind crypto was a big thing is financial inclusion, right? The current sort of financial system feels a bit gatekept. It's almost become a barrier to entry and a means to almost prey on, society the way these big institutions do. And so I'm just concerned, how do you almost view the more we almost regulate the space, how does that take away from some of the benefits of this decentralization? Because the blockchain is different to cash in that cash is fungible. It's like we can both have R100 note, but this one's my one, that one's your one, and there's no way of almost telling the difference. Whereas with like NFTs, obviously we saw non-fungible tokens. you have and I forget the term, but to help you with this,
Like some
it's
IP
like
address
some,
essentially.
yeah, and it was on the top of my head, but I can obviously own an NFT. Someone else can take a screenshot and say they do, but because I've got the whatever that thing is, it's like it's unique to me kind of thing.
Yes, yes,
So
yes.
how are you thinking about like regulation and how it may almost kind of dig the heels of like government oversight into the financial sector even more and give them even more oversight because everything is on the blockchain. Nothing escapes the blockchain. And if they can regulate that, if they regulate it too extensively, it almost will have the opposite effect where it
Hmm.
takes away from some of the
Defeats the
freedom I
purpose.
think we're
Honestly,
getting.
I agree with you 100% because think about this whole idea of decentralization and whatever, but look at the people that are buying the most Bitcoin. It's big financial institutions, that's the thing. Like we're in a free market, unfortunately, or fortunately or unfortunately, however you want to look at
Mm,
it, right? And now
yeah.
we've discovered this digital gold, right? There's this thing that now there's the digital gold. And literally everybody is at free will to accumulate as much as possible, right? And I think it's very irresponsible for, I would even say, some of the governments out here that haven't even started looking into it. I don't know about, let me rather say, I'm not 100% sure about the South African government, but I did hear that, I think it was a snippet from the, who's
Sona,
no, I'm just trying to,
Budget
budget
the guy,
speech.
the
speech.
central bank guy, Lesego Kganyago, I think it's,
Oh,
yeah,
yeah.
but he was just very
The
like kind of
SOB.
yeah, he was just very like kind of anti,
Yes, I
crypto.
recall that.
And,
Some
and, and,
conference
and
you're speaking at.
exactly. And it was such a very, like the take, I wasn't too impressed. I felt that, dude, literally uh, just imagine we're like 100 years back, right? And gold is freely mineable in our let's say in our country in South Africa, right? Gold is freely mineable. And we have people coming over here literally and with crates and all the equipment and the machinery taking as much of it as possible. And then we're still like, no, guys, we still need to regulate. Are we sure this is even gold? Are we sure this is going to be that? While they are busy taking everything, unfortunately, it's gotten to that race where institutions have joined the race, and that automatically makes it unfair. So the only thing that I could really say to retail or anybody that wants to get into it, or that is also considering what you're saying, that okay, well, with these institutions coming in, it kind of makes it unfair and defeats the whole point of decentralization. Like, look at how much Bitcoin Michael Saylor owns, right? The best thing that we can do is buy as much as we can because it's not gonna stop. They're not gonna stop buying the asset of tomorrow. They're not gonna stop buying the gold of tomorrow. Hence, they are creating strategic reserves. That's why sovereign wealth funds are buying, and it kind of does make the game a little bit unfair. But going to your NFT chat, right? If we talk about NFTs, I think NFTs, the idea that the person can take a screenshot even though you own the picture, I don't think that will be too much of a problem in the future, right? Especially when we go, I think, into the whole idea of the metaverse. How I kind of think about it, or an example that I normally think about is, yes, you might take a screenshot of the picture, but in the metaverse, um, if let's say the Nike building, let's just say for an example, wants my NFT and they put it there, they will be paying me. So you can have it, anybody can have it, but I will be the one that is simply making the money from it.
Getting
It's
the
like
royalties, yeah.
exactly, it's the same with music almost kind of, or like the art. You know that fair
Because
enough,
you've got
yes,
the
you can.
smart contracts and what
Yes,
obviously you link it
exactly.
to that, yeah.
100%. So I think that there will be a way for people to gain from it. I don't think the whole idea of just the screenshots so somebody can use it. I think there will
Mm.
be that extra thing that comes with owning the NFT, that will give it that value.
Last
Clean,
question,
clean.
KT,
Okay, now.
on cryptos. This is just for the general person. Uh, with Bitcoin or with these coins that are created, obviously the general the general thing in an economy is demand and supply. Somebody needs to have a demand for something for there to be, or somebody needs to be able to supply something in order for them to know, okay, now I want that thing. And then they come and meet and say, okay, no, this is the price that we're going to buy. I'm buy it from you, and then I'll decide what I need to do with that thing. Is there a specific amount of coins in the market? Because, or is it just an unlimited amount? At any given time, somebody can buy a coin and then own the coin forever and run the price up? Or is it that there's a specific amount, let's say 2 million Bitcoins or 2 billion Bitcoins that has been created, or 2 billion XRP coins that has been created, and once it hits that point, we then out, which then drives up the demand because now the supply is low and now the price of it actually goes up. Because I've gotten this question multiple times where they ask, oh, like, so multiple people, so you've been saying like America's buying up the coins, or multiple, let's say JP Morgan is buying up the coins. If they're buying a billion coins, what how much coins is there for the average person on the street then? Is it gonna run out? What's gonna happen? Is there like an unlimited just overflowing amount of coins in the market? Or what is it that actually creates this value besides the purpose of it? Because my view of value is that I have something that you want, and based on the fact that you want this more than what I wanted, I can place a value on it, or we can come to an agreement for the value of this thing that you want now. So now I can sell it to you at that value. So based on that, just that ideology of demand and supply, how does the thing actually work, bro?
So with Bitcoin, right, specifically with Bitcoin, there's a maximum supply of 21 million coins, right? So what that simply means is that once there's 21 million coins in circulation, there will be no more Bitcoin to be made, right? You cannot mine the Bitcoin, right? So it largely also depends on the use case. That's why it's very important to research, because some coins don't have that, but because their use case is completely different. And if you understand it in that context, that's where it makes sense. But specifically speaking on Bitcoin, Bitcoin is a store of value, right? So what makes, like, for example, let's just speak about gold, right? So what makes gold so valuable? Why is gold, like, this medium of exchange that's lasted for so long and so forth? It's largely because it's very hard to destroy, and it also, there's almost, it's hard to mine, right? And hard to mine, you have to, it costs a lot to mine and so forth, meaning that it's not so easily, there's almost like a supply limit. You understand what I'm trying to say, because it's so difficult to mine, or
Hmm.
it costs so much to mine. There's almost a barrier to that, right? That's ultimately what gives gold its value, because you know that tomorrow someone's just to, it's not like a stone where I can just go find another one, and then now I have the same, now I'm buying, you understand what I'm trying to say, or I have the
Mhm.
same value, whereas I just found it. So gold, that's what gives gold its value. Now with Bitcoin, we must look at the stock to flow. And I think maybe, if we had a bit more time, I would have actually just walked you guys through the stock to flow so you understand. But the stock to flow is basically comparing the gold and Bitcoin, like apples to apples, like for like, right? So it basically says, with the current production rates and the current with the current production rates of gold and the current supply, how long would it take with the current supply rate for people, for us to mine the gold that is currently available to us? So kind of like double the supply of gold, right? And then I think it's 60 something years. And that was the highest stock to flow. So stock to flow model is this. It tells you how long it will take with the current supply rates to get this asset, to basically produce the same or
Mhm.
mine the same amount of this asset, right? And gold is the highest with like 63 or something like that, or 68, I'm not sure, years, right?
Mhm.
So that's why it took, because it would take 63 years with the current production rate to basically get the same amount of gold. So that's why it's the most valuable thing, or prior to Bitcoin. But now the stock to flow for Bitcoin is literally 100 and, I think, 120 something. But that is, for the first time in history, something has a higher stock to flow ratio than gold, which means technically Bitcoin is a more scarce asset than gold. And keep in mind, every 4 years, the stock to flow for Bitcoin doubles. Why does it double? Because the supply gets cut in half. So when they cut the supply in half, the stock to flow ratio for Bitcoin literally doubles. You understand? So literally every 4 years, the Bitcoin stock to flow ratio will double. And the first time that it went above gold was in the 2024 Bitcoin halving. And I think like that's so significant. I know I sound like a bit of a maniac, but like it's so significant. Like people don't understand that for the first time, something has overtaken gold stock to flow ratio, and it's Bitcoin. And I don't think people. Maybe we can have like another session where we just speak about that for like a quick 10 minutes, and I can show you guys exactly what I'm talking about with the stock to flow on the charts.
That would be dope. That would be dope. No, I think that there will definitely be a part two, bro, because this one's been a banger. We're gonna move on to the final section of the pod, which is the rapid fire questions. Basically, you'll have, what is it, 30 seconds, Marcy?
30 seconds.
30 seconds to answer the question. I've just got four questions, bro. It's not
Too hectic.
too hectic. All right, you ready?
Yeah, sure.
Let's go. First question. What is your go-to or go-to trading resources? That can be books, podcasts, or YouTube channels. Top three.
Ooh, I'd say ICT, I'll say Wakar, and I'll say Photon Trading. Those
That's
are like the
all
YouTube
YouTube.
YouTube channels. Yes, that's YouTube channels.
Clean, clean. An
And,
icebreaker. It's
and
all
in no
right.
particular order. I just thought of ICT because I gotta give tribute, but in no particular order.
I get you, get you, get you. Question two. So, do you think someone needs to go through a course or mentorship to kind of become profitable? Or do you think there's enough information out there where if they're disciplined enough, consistent enough, persistent enough, over time, they'll get it? 30
Honestly, my
seconds.
my advice to you would, or to anybody, would be go get a course, man. Find someone that really is getting the results that you want, and get a course. Because if you do it yourself, it's like learning how to drive alone. You're just gonna make so many unnecessary mistakes. You're gonna be crashing unnecessarily. There's a lot of things where someone could just tell you, no, don't do that. So you don't have to go through all of that
Five
or get hurt.
seconds.
So yeah, ultimately the best thing would be to get a course. But if you're a bit of a nut head and have okay, let's
Let's
leave it at
go. I had it. I had
Okay.
it. Let's go. Question three. Question three is a two-parter now.
that.
So,
Okay.
what was the biggest mindset shift that led to the most growth on your journey? And then, as a follow-on to that, what were the top two or three most important actions you felt or you saw yourself taking as a result of that mindset shift that led to the
Okay.
most
So
growth as well?
the most important thing is learning how to take small steps. I realized that I wanted to make like the leaps, like the super leap. So understand small steps. Trading needs you to take small steps. The second thing is you must understand that the things that you do outside of trading kind of seep into your trading. So the actions, so when it comes to actions that you must take, you must look at the behaviors that you have outside of trading, because they will definitely, so good disciplines, going to the gym regularly, that is very important. But with regards to trading specifically, journal your trades, journal every single trade that you take. That is the one thing that I can give you.
Let's go. Let's go. Fitness and journaling. Let's go. Last question. If you could have four coins only in your crypto portfolio, what would they be and their respective weightings as well in terms of allocation?
It would be Solana, Ethereum, XRP, and the Binance coin. So Solana and Ethereum would be 50%, or I'd even say 60% of the portfolio, and then the XRP, BNB, and what did I mention? The other coin, that would be the other 40%.
Four coins.
So yeah, so it will be Solana,
Yeah.
Ethereum, XRP, and BNB. So the Solana and the Ethereum would be 60% of the portfolio, and then the XRP and BNB coin would be the 40%.
Danko. Danko. I can stop sweating now.
Perfect,
But geez, that
bro.
was such a dope episode.
Perfect.
Such a dope episode. We went from obviously the journey that you started, which you eventually introduced Marcy to, kind of the growing pains, to eventually committing. And that's something I'm noticing is a common theme in a lot of people's journey. It's like there's comes a point where you kind of commit to it, and that's where a lot of the growth really comes. Maybe that's why you need a course or mentorship if you're watching this and you feel like you're stuck and it's not working after 2 days. You just need a bit of a
Yeah,
mentorship.
that's like
100%,
a
bro.
very
So that was so dope. Then we obviously pivoted into like strategy and we got a bit deep in that and found that really dope. And the crypto section honestly could have gone on for another hour,
Yeah,
but we
100%,
were
bro.
obviously limited by time. But bro, thank you so much for
Thank
joining. Where can people find you, bro?
on Instagram, I have my personal Instagram, Katleho_Moletsane. And then my Instagram, I just post charts and so forth on my journey. That's chart specialist. Let
Let's
me just
go.
double check. Yeah, chart specialist,
Sensei.
yes.
It is shot specialist.
Yes,
Um,
yes, sir.
Yeah, Sam, before we wrap up, I actually just want to mention exactly what Katie said in one of the rapid fire questions. How you do one thing is how you do everything. And you guys need to bear that in mind because everything rolls over into the next thing. So yeah, yeah. Shout out Katie for the pod, and Sam, you can wrap it up, bro.
Nah, I appreciate it.
Thank you, bro. And thank you to our viewers. If
Thank
you've
you.
made it with us this far to the end, please consider following us, liking, sharing this with anyone you feel it can add value to. We're really trying to bring you a real look at what it takes to become a consistently profitable trader because we've been through it. We've been in the game for a while. We've gone through certain growing pains that we would like you guys to kind of fast track through. And that's why we really do this, and that's why we're trying to bring this to the space because it desperately needs it. So as always, remember, guys, consistency is the choice you make when you start doing the things you know you should be doing day in and day out.